What's up, everyone? So, today we'll be looking at Accounting Paper 2 2023, again, which was written in June. Um, for today, we'll be looking at the bank reconciliation quickly for 25 minutes, for 30 marks in 25 minutes. Right. So, getting straight into the first question, it's true or false. You know what to do. You write only true or false. So the first one says the credit balance on the bank statement. You need to take note. Credit balance on the bank statement means that the business has a positive balance in the bank. This is very true. Right, remember that in the bank statement, not bank account. Bank account is in our books. So this is bank account. Bank account will have a debit balance as a positive balance. This is in case you get confused. All right, so this is true. Then a debit card may be used to withdraw cash from an ATM. Also, this is true. Remember that if you take your card and you are withdrawing money in an ATM, of course, you can do that. And 1.1.3 says a bank overdraft is a short-term loan that is transferred into the business bank current bank account. So this is not true. It is false because a bank overdraft is not transferred into the current bank account, but it is someone would say it is a short-term loan, but um, it is when the bank allows you to have a negative balance on your account, right? Whereas they charge you an interest. Not that it is transferred onto your current bank account. So let's just quickly populate our answer book. We have true, true, and then we have false there. Right. So for this question 1.2, I just want to let you guys know that when you're doing bank reconciliation, you're just not required to stick onto one method of doing it. So my method of doing it, my method of teaching it involves flexibility. It involves you understanding what's happening. Why am I doing a bank reconciliation? So, a bank reconciliation is done to correct errors made either by the bank or by the business. Now, you also need to understand if the business makes an error, right? You and perspective is also an important aspect when you are doing bank reconciliations. So now when you make an error, you fix your errors in your cash payments channels or your cash receipts channels. So you fix on CRJ or CPJ, right? That's the business. Now, secondly, when the bank makes an error or they forget something or they duplicate something or any mistake, we fix on the bank reconciliation statement. So now, when I'm doing these, I'm doing them simultaneously, depending on the information that I come across, right? So let's just get straight into the question so you can see and be able to apply what I'm talking about. So the first one, we're supposed to update the totals for the CPJ and SRJ. Then number two, calculating the correct bank account. Then number three, we are supposed to prepare the bank reconciliation statement. Then number four, we're making comments and we're also suggesting ways or controls to fix a certain problem regarding the depositing of cash, right? So these first three questions, these are the ones that I like to do simultaneously. I move from one to the next and then from back, like just back and forth. So let's just see what I'm talking about. Right. Information A, we have an extract from the bank reconciliation statement on 31 March 2023. What you need to understand is that on March, we made a bank reconciliation statement regarding the March's bank statement. So in this bank reconciliation statement that was prepared on 1 March 2023, we were just telling the bank to fix their errors. Now, we want to know if those errors have been fixed or not. Now, this piece of information is what will tell us if the bank has fixed their errors or not, right? So if they haven't fixed, or now we have some new information regarding any errors that the business might have made, we will fix them in our journals, right? So now the first bullet point says the outstanding deposit on 18 March appeared on the April 2023 bank statement. So this one, it appeared. That's just what we want, right? So it's cleared, it's fine now. Second bullet point says the deposit on 28 March 2023 appeared as 22,200, right? 28 March. We told the bank that there was a deposit of 37,200, but then the bank says no, the deposit is actually 22,200. So there has been a difference there. If we've recorded this initially in our CRJ, then the information continues to say an investigation revealed that the cashier has disappeared with the outstanding amount. So the cashier here has stolen a certain amount, which is the difference between these two. And let's just see quickly what the difference is. 22,200, then that gives us 5 there. So that's 1. That's 15,000 difference, right? So the cashier disappeared with an amount of 15,000, right? So initially we recorded this in our CRJ, and the bank also said, now you have 22,200 in your bank. So the 15,000 that has been lost, we need to reverse it. Now, how do you reverse cash receipts journals? You reverse them. Their opposite is the cash payments journal. We go straight into the cash payments journal. We write 15,000 because we are reversing that payment there. 20, what was the amount of 37,200, right? Done with this one, scratch it out. Okay. So let's just make sure it is clear. Then the last bullet point says both the EFTs were on the April statement, but EFT 768 appeared with the correct amount of 4580. We told the bank, listen, we have paid 5840. Please record that. And then the bank comes back to us and they say, no, you have paid 4,580. This means in our books we have recorded more. We have overstated the payment in our books. So now, for it to match the bank statement, for our books to match the bank statement, we want to make sure that the amounts that are recorded match, of course. So now we are going to account for the difference of 5480 and 4580. So the difference here would be, okay, this is 8, so let's see, that's 900. Okay, so this was a payment initially, and when you have overstated a payment, you then reverse that payment on the CRJ. So we have a CRJ reversal at 900 there because we are the ones who made an error, right? So that's cleared. And then we have, okay, this one is also cleared. Then we have a favorable bank balance as per account of 49,720. So that was our bank account there. We'll need to use it here when we are calculating. So it's 49,720. So let's just keep it there. See, now I moved from 1.2.1 to 1.2.2 so that I don't forget any pieces of information, because the information is spread out all over the extracts. It's spread out all over the additional information. So whatever information I come across, I just quickly fill it in my answer book, right? Then now I move on to information B. Information B just tells us about the totals that we're given in the answer book. Then information C says information on the April 2023 bank statement. This is very important. It's on the bank statement, but it's not on the April cash journals. None of these items appeared in the April cash journals. First bullet point in information D, which is additional information. It says the debit order to Bralett Municipality was for water and electricity. This happened in the bank account, but it was not on our cash payments journals. So remember that whatever happens using when we're using cards and stuff, it's not really cash. So it cannot be recorded in the cash payments journal. So this is another reason we're doing the bank recon. Whatever was not recorded in the CPJ or the CRJ, but was in the bank statements, we need to account for that too. So here in the CPJ, we had 2882 as a debit order for water and electricity. Then we have Y Marigold, the tenant depositing money for rental. So we have Y Marigold, 8,400. It's a receipt. So we received 8,400 from the tenant. We're done. Then, okay, let me just scratch these out. Third bullet point, the deposit from Bentley Microloans did not relate to the business. The bank was informed about this error. So now what happened here is that the bank made an error. The bank was informed of this error. We didn't do anything on our side because we know it does not relate to us. So now who made the error? The bank. Then you ask yourself, where do we fix errors that were made by the bank on the bank reconciliation statement? So now that's where you see that we need to jump into the bank reconciliation statement. So this is what I was talking about. So here we have an error on statement. Okay, so then we have our debit side as always, and then we have our credit side. Now, for our bank reconciliation statement, remember that we're fixing errors that were made by the bank, and the bank has a positive balance on the credit side, like we saw on the first true or false question. The very first question, we said it's true, so we have to have our positive balance on the credit side, then we have our negative balance on the debit side. So these people, what they did with the 65,000 is that they added it to our credit side, right? So since they added the 65,000 on the credit side, we want to remove it because it doesn't relate to our business. We're just going to simply debit that amount of 65,000, right? Then now we are done with this one, 65,000 scratched out. Cash withdrawal of 742 for fuel for the owner's vehicle. We recorded in the CPJ 740 to cash withdrawal. Then we have EFT transaction fees that were duplicated on the bank statement in error. So these were both recorded in the bank statement. So we only needed one to be recorded. Then the other one, it's an error that we need to fix. So we jump to the bank reconciliation statement again, correction of error of 360 there on the credit side, because remember the transaction fees would reduce our account. So to reverse that, we need to add back the 360 to increase our balance there on the bank statement. Okay, then two amounts that we haven't really taken care of is the 18,360, the 220, and then one more is the EFT transaction fees also that do not appear. Okay, so this is a bit messy. So one of the two 360s has to appear as bank charges. Remember, it has to appear as bank charges in the CPJ. So bank charges will equate to 220 plus the 360, which is 580. So the 580 goes into our CPJ right there. And then we have the 18,300 here, which you haven't taken care of. It's an investment matured. So an investment that was matured, we have received money from our investment. So it's a cash receipts journal. Then we can just simply add our totals here because we've completed everything regarding the journals. Plus 18,300, then that's 143,200, then 217,815, 740, 580. So that's 23700, right? Then now, calculating the correct bank accounts is as easy as ABC. Even if these amounts are incorrect, what you need to do, just take these amounts right here so you can get method marks. I can't stress that enough. If you don't believe in your numbers, as long as they are, just take them to show that you know what the principles require. Right. So you have your, I'd say this is the opening balance plus your receipts. You have received money. It's an addition. Then you have paid 237. This is your cash payments journal. Then let's see how much you have in your bank account. So it's 49,720 plus 143 minus 237. Then we have a negative balance of 44,080. Right? So it's a negative balance of 44,080 there. Right. So now when you're doing your bank reconciliation statement, such that you do not forget anything, start with the balance as per bank account, the one that you've just calculated there. So it's a negative balance. Remember, on your bank account, right, you have credit, you have debit. This is from books of business. Like I said, perspective is really important when you're doing the bank reconciliation. Now, on the books of the business, we have this, right? So our bank account will increase on the credit. On the debit side, I beg your pardon, let me just say bank, then it will decrease on the credit side. So since it decreases on the credits credit side, now we have a negative balance, which means the balance was closed on the credit side, right? So now, if we're recording it on the credit side, it should come as it is here on the credit side as 44,080. Don't be confused by this plus sign here, right? So that was just to explain why I'm recording it on the credit side. So whichever side your bank balance is, according to the books of your business, record it on the relevant side, either the debit or the credit side. If it was positive, I would have recorded it on the debit side, right? Then now we move to information E. Information E says the cash journals reflected the following entries that did not appear on the April 2023 bank statement. So this was all in the cash journals but did not appear on the bank statement. How do we fix this on the bank reconciliation statement? So it's a deposit of 22,500, which was outstanding. So it's an outstanding deposit of 22,500. So that's 22,500. Then I saw outstanding EFT. Right, let's just read the information. Outstanding EFT 883 and 884. So the first one was 9520 for stationary purchase. The second one was 12530 for repairs to the buildings. These were not in bank statement, so we need to fix them in the BRS. Jump straight into the BRS. So we have outstanding EFT 883 and 884. So we have 9520 and 12530. Because remember, these are payments, so they will reduce the balance of our bank statement as per the books of the bank, right? Then we have our balance as per bank statement, right? So the balance per bank statement here, we were given a, what's this, a question mark, right? So that means it's supposed to be a balancing figure. But how do you get the difference between the two, the balancing figure? You do totals on both sides, both the debit and credit, and see which side is bigger. So now let's add the debit side first and see what we get. 65,000 plus 9520 plus 12,530, which is 87,050. I'm writing here because I just want to still see which one is bigger between the two. Then I'm adding the credit side now, and I'm getting 66,940. So as you see, this side is bigger. You just add this here. Then now you'll take the 87,050 and minus the 66,940 to get 20,000. You'll get 20,110 as your balancing figure, and then these two will now be equal, right? So if you did not understand that, feel free to pause the video and rewind as you wish. Then 1.2.4 says Violet noticed problems with the depositing of cash. Explain two measures that you can use to address these problems. So when you're depositing cash, the first thing that I usually think about is segregation of duties or dividing your duties among employees, because if someone is recording an amount, then it shouldn't be that person to deposit the amount. So the first one I'd say segregation of duties among employees. So I just say bookkeeper should not be responsible for making deposits. So since the bookkeeper is the one that actually writes the amount, so it shouldn't be the bookkeeper also that will go to make the deposits, because they'll write, let's say maybe they're required to deposit 20,000. Then now they'll record in the books 5,000 and then also deposit 15, they'll also deposit 5,000 and then still the rest of the 15,000. Then one other suggestion that I would give is that you could see that in this question we were doing reconciliations. So wouldn't it help for the business to do regular reconciliations may be done to detect fraud or any theft of cash. You could say detect or even prevent any theft of cash. So that then brings us to the end of our video today. Thank you so much for watching. Please ensure that you hit the subscribe button, drop a comment on any of the accounting videos or any of accounting topics, paper 1, paper 2, that you might need help with, and ensure that you share with friends and family who also want to be part of the Acing Accounting family and those who want to ace accounting. So from me to you, good luck on all your tests and exams. I'll definitely see you on the next video. Cheers.